Welcome to Markets Now. I'm Michelle Rourke with Scott Varilek with Kooima Kooima Varilek. Well, we're seeing pressure in soybeans, corn, and cattle this morning, just a little uptick in wheat and nearby hogs. Scott, thanks for being with us. Let's talk about the cattle market. Charts looked really good yesterday. We're seeing a little bit of consolidation here today going into a cattle on feed report. I guess that's not to be unexpected, right?
Yeah, thanks for having me. And yeah, I think with the nice straight up line that we've had a nice week and a half of a rally and pretty sharp rally. So pretty easy to say, okay, cattle on feed report day, overbought. Easy for a little bit of a correction to kind of take some risk off, maybe some of these longs to unwind a little bit. So technically pretty easy for it to take this little correction. And so I think that's warranted.
And we are actually up into some chart resistance again, like on December live cattle, aren't we?
Yeah, I think you can find a lot of different lines here. I wish everybody was consistently looking at this is a really strong one, but you can draw lines all over the chart right now and find different prices, different levels. And we're not all looking at the same one here right now. So it's a little bit confusing that way. But we can be happy that we've rallied. We've taken out a few of the different resistant lines, but it seems like there's always another one left behind from something. So I don't have one that I'm absolutely in love with that said this is the price we got to get through, but can respect that we're getting through some, and we'll keep all those lines up. But it no clear-cut direction for me if I'm just looking at a chart.
So one of the things that's helped push us into the upper end of our trading ranges here is just the fact that cash trade finally bottomed last week, but it's been a pretty quiet week so far on cash, hasn't it?
Very quiet yet. We're coming into Friday and still kind of looking for some bids. My phone's a little bit dead on some of that action right now, so kind of waiting. But cash has been strong. It's been holding, those low 180s, and it feels good to me that we finally bottomed that. And some of those low southern bids came out the 179, and then it's back up to 180 already. So I think you might have some prices that are trying to come in early and low, and I don't see guys diving at that early first bid. So maybe yet to be determined if we're going to get up to the 184 again. That was passed last week in a bunch of the north, and it's a little bit head scratching. So the negotiators, the guys that are negotiating cash trade in the north, are sitting very current. We had bids from all different packers last week, and then you look at these carcass weights and say, well, how is this happening? It looks like you're so backed up that they're going to lowball us here and you don't have any leverage, but we do have leverage. The north, very current, actively selling cattle, moving them along. It's the formula country that's been keeping the weights, well above year ago levels, well above all of those, 5-year averages. That's what the packer's using to get some extra weight on the market. So this is, tight numbers showing up, tighter year over year kind of numbers. The cattle cycle, I mean, that's still in effect here. And I think that just proves that they're not able to break this market much further, even though we have weights, 21 pounds over a year ago on steers and 25, 26 on heifers. So all that extra weight, and we can still do this, still dig our heels in moving forward here.
Yeah, that seems to be the one headwind. The other thing that has kind of pushed the market this week has been the fact that we had the drop in interest rates, finally 50 basis points, the stock market making new highs. Does that attract the funds in here finally, do you think?
It sure doesn't hurt. And I think it does, because we've been mirroring a little bit of that stock market trade on the way down. So were the cattle. That was a risky kind of moment as we were looking at our economy and hearing some negative thoughts here and there. And once we were able to bottom that stock market, turn it around, get it up into some new highs, so did the cattle. That we've really taken part in that over the last week and a half as we've put it on. So, and I think every day that stock market holds, we're not seeing the big downs and the wild swings, and now more of a steady churn higher. Hey, cattle feel a lot better when that's happening. So, and I think that just proves all the way through. I mean, it was cash feeder prices as well. We're coming into this fall run and seeing some optimism. Prices seem to be very strong. Guys actively looking for feeders and hearing, yeah, we're back to, so many months ago level. It's still trading pretty good. So we're off to a great start for the fall, and I'll hope that the feeders are the leaders. I think we'll still have less numbers to chew through here, and feedlots are going to go after it. So I think cash feeders could be the thing that turns us around and brings these prices a little bit higher.
Yeah, we like it when the feeders are the leaders for sure. Hog market, we've had a chart breakout there again. What do you think about the hog market? Because is this been all a push from speculative money, or is demand just better than we thought?
It feels a little speculative kind of money for me. Yeah, you got technicals that are breaking out and fundamentals to me that look like we are maybe due for a little bit of a break and that seasonal break. But yet we climb higher. So it's been a little bit impressive. But this is the third leg higher on this little bit of a rally here in this breakout. So I'm all eyes looking for the downside. I'm not standing up here on any kind of fundamental news that says, hey, we're gonna get this pork market up and out of here. I don't have that news that I'm seeing to make me that confident. So I'm more leery to look to the downside. The only one thing we would note is it feels like, the LRP numbers that happen on these squeezes as we get towards the end of these months, those large differences, as your LRP is well in the money, suddenly we do climb back up closer to those levels, as there's a lot of money flow happening at that. So an $84 number on the October hogs and 76 on the D's hogs. Kind of ironic how we've just kind of closed that gap as we get closer to the end of some of those contracts.
Yeah, it seemed like there was a basis adjustment going on there for sure. Grain market, corn and soybeans, especially soybeans, are down pretty hard here this morning. Are we seeing harvest pressure, or is this some of these forecasted rains for Brazil?
A little bit of both. I think forecasted rains, yeah, that's going to be very important moving forward. We're going to have to keep a close eye on that. So yeah, you're getting into their rain season. We know we're just done with their dry season, and yeah, they're entering in a little bit behind the pace on precipitation, but we're going to see some rains sprinkled in. And if it doesn't materialize, our Sunday night trades could start to get a little bit wild, as South America is one of the biggest, upcoming, weather seasons that we're going to have to look at, because, the amount of beans that we're seeing raised in South America, they've just got their foot on the gas pedal, more acres every year, and they're going to add more acres again this year. So it's going to be that size of crop, and China has really turned to them for business. So that's, they're 8 months year to date. Those numbers were what I read today, 217% increase over year ago levels for Brazil, and then the U.S. were 73% down.
Right.
So they've really turned that way, and they've got a big crop last year, looking to have another big crop. So I guess their weather market's going to be a little more important. And the second part of your question, the harvest pressure, I think we know we've got a big crop coming in, and it's just kind of that we know we're going to have some yields. There's variances, hearing some discrepancies. Eastern Corn Belt maybe a little bit disappointing here, and some of the Western, a little bit more positive. So getting a little bit of a mixed bag, but we can say that it's going to be a big size crop. We've got a lot of bushels coming in, so maybe it was a little early to say harvest low is totally in. We're good. We're ready to go. I kind of still feel that way, that these lows are going to hold, but we're going to have a little bit of wrinkle here yet as we get some of these bushels coming in.
Yeah, we should have mentioned we did have some export business to China this morning, but it was a good point you made that we are behind as far as our soybean export totals, and China's going to Brazil. So, okay, thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.